All right, good morning. Going to go over trade I'm in right now because I'm hitting the inside bottom. So I'm going to quickly close out. I'm up 312, 6 contracts. My plan was to close out 4. So I'm going to drop, we're going to drop down 2 to 4, and I'm going to close 4 contracts out. So I'm left with 2. Going to move the stop down about 3/4 of the way down. I want to give it a little extra room, but I don't want to give up all my profits. We're going to hit 2. Okay, so a couple reasons for closing. One, I didn't want to close at the 1-to-1. I wanted to close a little bit beyond that, and I did see here that 1-to-1 was right at the inside bottom here. So the inside bottom again is, and you can look up inside tops, inside bottoms. Basically, it's the inside of a swing. So you have this right here. Back here, you have a swing down. Any swing. It could be this swing, and you have the bottom down here. Okay, so this swing, you have a bottom down here. So you have a swing down, swing up. You have the bottom. So you have the low. Okay, everybody knows about the low. The inside bottom would be the inside of that low area. Okay, so the high of that red candle. Same over here. We would have a low, the wick, and then we would have the high, which would be the wick of that candle. So basically, either the body or the wick, whatever it is, would be your inside bottom. So they don't always go past those levels. So as I traded earlier, I got into a trade over here and shorted, and it went down and just turned to the inside bottom. So I had closed out partial on that one. Well, this run, I decided, okay, I don't know if it's going to close. I thought about, putting on a pending order, because typically we'll put on a pending order of 4 here. And I'm getting ready to come down, and I didn't get to put on my other order as I wanted to get in here and shoot the video. But typically we would come in and put in an order to close out, a buy limit order to close out 4, and then a buy limit order here to close out 1. Now it's right there, so but it would be a buy limit order to close out 1 more contract right there. So basically what you want to do is, as your set plan to trade and off your trade sheet, is to and I don't have the screen share up for that. You could pre-plan this and on your trade sheet that if it hits take profit level 1, which is 1-to-1 here, or level 2, which is 1-to-1, you would close out part of your trade, move your stop to the halfway point, and when it hits the next level, you would close out another runner, and you would move your stop to a break-even point. So there's no loss. So you could pre-plan that, and then as it hits your profit targets, then at that point you would move your stops and take your boxes. And what I'm talking about is this right here on the trade sheet. So basically, again, pre-plan your moves that when it hits level 2, I'm going to move my stop to a break-even point. Okay? When it hits level 3, I'm going to move my stop to, or halfway to break-even. When it hits level 3, I'm going to move my stop to break-even. When it hits level 4, I'm going to move my stop to level 1 or level 2, whatever it may be. So, you can have those all set ahead of time, and then as it hits, take level 2, that you need to move your stop to the halfway point. As it hits level 3 and closes out this next contract, we know that we want to move our stop to a break-even point. So you can set these up ahead of time that if it hits level 1, level 5, where are you moving your stop to? Okay. Basically, though, we had some news coming out. Here's the news coming out, or that was out for this morning. Sorry, 8:30 news was unemployment claims and CPI, and then we have the 30-year bond auction at 101. So that's the only news. We don't have Trump or Chairman Powell speaking, so I do have those on the sheet that if you check those, it lights up in red. That's really just kind of to stay in your face to remind you that they are either one of those are speaking. Basically, you check your asset class. Is it oil? Am I only trading oil for the day, or am I looking for other entries? If it's only oil, it's oil. 3-minute time frame. News times trade New York session from 7:30 to 11. Here I checked day trade. I decided to day trade today instead of scalping. Scalping will take a lot out of you and is very fast paced. Notice if I hit scalping, the 3 time frames then on the indicator are, you should adjust to 3 minute, 5 minute, and 15 minute. So shorter time frame, shorter goals, quicker action, it'll wear you out. So I switched over day trading today, which then sets these on a 15 minute, 60 minute, and a 4 hour on those 3 time frames. Okay, everything was red as it had already moved throughout the night, and I checked off my boxes as things went down. Basically, we had oil was in a downward move throughout the London session, and then it had retraced back up. So as it does things, we're ticking off our boxes, okay, as it hits the criteria for us. So basically, again, if you look over here to the left, downward move through the London session. Then it started pulling back. So draw your retracement line up the, pick a couple points here, an A and a B point, and then what we're looking for, if I can get this not to stick to my chart, is we're looking for that to pull back up. Okay, so it pulled up here. We don't take those trades just on that criteria that, you know, we had it's pulling down. We're going to look to sell because everything's red on the indicator. Move throughout the London session down, it retraced back. So since it retraced back, that gives us 60% reason to take trade. Well, we're not going to take the trade right then and there, right? 60% reason is not enough to take the trade because you're jumping in basically as it's moving up. I don't see any, as this moves up, I don't see any reason why I should short it at all as it's moving up. Riskier trade. I'm only at 60%. Let's not get in that. Okay, 70% and higher, it's okay. So did it break the retracement line? Yes, it broke the retracement line, that red candle. Check that box. We're at 70% reason to take trade. Next one is it pull back to test that retracement line or a high low. Sometimes you don't have good retracement lines where you're going off just highs and lows. We had 2 here. So it pulled up, made a high, broke the retracement line. So then on this pullback to test the backside of the retracement line, it was also testing this previous high. Basically both of those, okay? It pulls back to test the backside of the retracement line as well as the high-low. So we had both, okay, multiple reasons in there to check that box. And then did we get a bounce off of that retracement line or high-low? Yeah, we did. We got a red candle. Okay, so traditional chart technique, that's your entry. Traditional charting. Okay, that's your entry when that happens. Now, if you want to wait for further confirmation, you're waiting on it to build up bearish structure over here on the other side of that pullback. Okay, sometimes they can skip up the back side of the line. So that's what we're waiting on. We're waiting on some of that bearish structure. And it does come down and form a low, a high, a low, back up to test this high again before moving on. Once it pulled through and broke this low, it gave a nice test of it here. I thought it was going to continue to push down, but it did not. Okay, it just pulled right back up to about the halfway point between, you know, this high and this low in here. So it gave a healthy pullback and then finally broke this other line. Gave a signal candle, and I got in on that pullback. I got in on that pullback during that because it was testing basically this area in here. So glad I got in when I did. The other would be to wait for that signal on there. So it just closed out another partial. Let me go out and pull a report. So basically we had multiple reasons on the checklist to get into that trade. We had a signal candle. We had several sell signals come in here. So multiple reasons to take that to trade. So it was up at 100%. Okay. So the first trade I got in was 739, which was earlier. So it was on that. Let's see. All right. So I need to go out and pull a report. Let's see here. On oil, So good, you know, it's hit, and we need to move our stop to break even at least. I'm going to put it out of the way of the order. So it did finally close out that other contract. And I need to change this, modify our stop to match. So we'll run this out for a while and see what happens here. I'll pull a report here and see what profit we've locked in. This one I have to pull reports. So we're still in and up so far. Let's see what we got. All right, so we had 208 on the 4 that closed. And I closed them down in here somewhere, right? $208. So we had plus 208 on it. And then 69 on this last one that closed out. And I'm not sure if it closed out on here because I was looking at that sheet. So we basically got 69 on the last one that closed. So now, you know, the only thing we can do with this is just manage or stop. I don't like what it's doing here, and it's hesitating to stay below this. It looks like this is our low over here from that swing during the London session. So I don't know if it's going to stay below that or not. I'd like to see it stay below, but we might get a healthy pullback, and we might get a pullback even past this low in here. You know, we had a swing low here, so it may pull back higher. So if you look at what happens, sometimes they will pull back, you know, and not only pull back to that high, but pull back past that high. So you got to be kind of careful, because just because it's pulled back and broken a high does not mean that the downward trend in this case is over. Okay, so sometimes they will. Sometimes they'll just pull back deep enough to take people out. So there's people in short over here that might have had their stop above here, right? And then as it's pulled back, it's taken those people out with the runners, taking the runners out, only to keep going short. And that's what we saw here. We saw here where it broke these lows, okay? And when it broke these lows in here, it only went back up to, why is that not working, guys? Let me switch screens here. Trying to get you a better mouse. There it is. All right. So I got the big mouse back. All right, there it is. So again, it pulled, after it pulled down here, it pulled back up and broke that high just barely, only to keep going short some. And that's what we saw here too, right? It broke the lows over here, and it pulled back to test the low. Red candles, you're thinking, great, it's moving on. And no, it pulled back up about halfway in between this zone here, between these highs and lows, and pulled back up only to move short. So just because it breaks a level, don't think that it's done. That's why we're watching the higher time frame. So that's why we're using the indicator, because the indicator, the 4-hour time frame on the bottom, because I've got them set up as a day trade today, as I'm day trading, 15-minute, 60-minute, and the 4-hour, 3 time frames. So the bottom is the 4-hour time frame that we are trading with. And it never flipped green. It stayed red the whole time. So we should be thinking shorts if we want to trade with that higher time frame. So that's what we're doing. So, you know, it's kind of stalled out here as it's really not wanting to. I don't think this is going to hold. It'd be enough to hold it. I think it's going to pull up deeper on it. Sorry. So That's why I've left my stop out of the way. I just kind of pulled it. Normally I just have it like right at break even at this point, but I pulled it out of the way so you could see the order or what we're sitting in profit. What do we got? 277. So we got 277 in profit on just oil today. So just one instrument, 277. And on this account, I'm only looking for the 500 a day. Oh, I had this line up as a stop line. I wonder why that was there. See, there's our pullback. So I don't want to move my stop too aggressive. So I'm leaving it at those 2 levels back. If it hits level 4 down here, once level 4's hit, if it gets down here, it may come back and stop us out. If it gets down to level 4, then at that point I'm going to move my stop to level 2. I'll keep it 2 levels back on this one. Got to give it that room for stuff like this where things just kind of wick back. You know, because it hit level 3, right? Came down and hit level 3. And if I would have had my stop trailing 1 level back, I'd have been stopped out right there on that wick. Okay? So instead, I'm still in it. Well, sometimes you got to give them that room. But that's why we close partial. Because if I wouldn't have closed partial yet, where do I close partial? Where's my target? I need to make daily money, right? So if you need to make money on the day to survive, well, then you have to close out part of your trade in order to capitalize on some of that. Let that sit. All right. Drinking cold coffee today. It's kind of boring, trading one instrument. You know, normally I'm watching 6 instruments, 4 to 6, but normally 6, watching 6. And, you know, looking at them, typically I'll come in the market early, kind of scan the market and see what instruments I think look the best for a setup or possible setup that might happen in the near future. So I'm not looking for things that are consolidated and nasty moves, and I'm looking for something like this that's trended throughout the night, you know, because when I came back to the computer, or when I got to the computer, I was over here. So again, it had moved down, a nice move down, nice healthy retracement, broke that line, and that's where I was looking for an entry. After that, I'm like, well, this looks good, a good setup. The 4 hour still red, the 1 hour was red, and the 15-minute was red. Of course they went green. They're going to go green on a pullback, and then they flip back to red, so we got to sell. So, and it had broken the retracement line, pulled back to test that retracement line and the high, moved on down to break that low, you know, right there. So, good signal setup on this one. So real happy with the signals set up on it, but that's what it takes. You can't always come to the market and expect the instrument you trade to give you a great setup every day. It's just not. So I've been doing it long enough to know that sometimes you have to trade a different instrument, and that takes some getting used to. So, of course, I recommend demo trading for a while until you get used to the instruments. But I like to do that. I like to scan in the morning when I come to the charting. I'm looking at the 4-hour time frames, looking at where the instruments are as in regards to my 4-hour support and resistance levels, my 4-hour zones, which is off those swing highs and lows, and then any 4-hour trend lines. I want to look at the 4 hours, see what's going on, see what happened through the night, where we're at now, and then I'll dial it down. So typically you can do that in maybe 10 minutes to half an hour. It depends on how long you've been doing it, and depends on how many instruments. If you're only looking at 2 instruments, well, it's pretty quick to do that. But you should always peek out at the higher time frame. You should never come into your charts. Never, never, never. You should never come to your computer and just jump on the computer, have it on a 3-minute time frame, 5-minute, 1 minute, and start trading. You should always, always look out the higher time frame and see what you see. See what's happened. See what kind of setup there is. Always. So I like so far that oil has held under this previous low right here. So that was our low to break, and we broke it. And so far it's been holding up under it. I don't know if it's going to stay there, though. We'll see. We've had a couple candles peek up above it, at these wicks, and that's what we're getting now. So I don't really want to see a candle close above that line. It could happen. Love to see that further push short. So nothing too impressive yet on the move. Overall, again, great setup for the morning on it. Just kind of a relaxed trade. Yeah, as we're pushing up above. Don't like it. We got 45 seconds. I keep spinning this cup, and it's... Got me some cold coffee this morning. It is ice cold. From a new coffee place. It's really good, though. Yeah, we're getting ready to close here. So we got about 16 seconds to close, and it looks like this candle is going to close above that low. Not what I wanted to see. That doesn't mean it won't push down further. It just, I think we might get a further push back. So I think we're going to get a further push higher. And then ultimately we might get it to push back down. It's really just barely popped below that low. As you see the candle bodies right there, this all closing. So if you look at the individual candles, these 2 candles right here, we had, this green candle close here. So this red candle here, let me kind of zoom in. So this red candle here opened right there, okay? The bullish side of the market, the bullish side of the market that pushed this candle up, pushed back up. That candle pushed up further. So the bulls pushed it up quite a bit. And then ultimately the bears kept it down. Okay, kept that down and said pretty much nope and just closed down here. Now then the bears stayed in control on this candle here. So the bears are still in control on this candle, and they pushed it way down. But then the bullish side of the market, the bulls actually kept it up, and it closed up. So real strong battle there between the bulls and the bears. That's why I said I'm not really sure how far it's going to pull back. Right now we're kind of in the indecision phase. So we're seeing that sideways movement because both parties are fighting over price here. So I'm not sure how that's going to pan out. Typically, I would like to mark a high and low, and I hesitate to go with that as my high because the wick is way up here. So the bullish side of the market actually pushed it way up there. Okay, so it could go clear back to there. So again, we already have a low back here marked. You can mark the wick, and we don't want it to go past that wick. I don't really want it to go any higher than it is, but. And then we have a new low down here to break that we need to see price push past this low in order to call it a lower low. So we're just stuck kind of waiting here. And let me know if you guys want to see more of the one instrument trading. I know it's not as exciting. It's going to be more me talking than anything else. Forgot to mark my checklist. So we did, I'm just going to, well, we had another trade in here, so this will be my second trade. I'm not going to go through and check all these for time's sake, and I don't know my entry. So we entry time. And we're right 8:30 on the nose. Six contracts on. We entered at 60.75. And our stop was at, or our stop, my stop was up here at 61.09. Partial close, the partial, I closed the first four here at 208. I need to go back and look at my first trade, mark those. The second was at 69 so far on the runner. And then we're actually trailing two stops back. So it only hit level 3. It didn't get to level 4. So level 3, we're two stops back. And I'm going to move that a little closer. The only reason I moved it past, again, normally I would move it right here. And it would be just better than break even. But the orders overlap, even though in the trade platform you select for them not to overlap. So if I click on the chart, it's going to cover again. I don't like that. I like to keep it visible. So that's why I moved it down. So again, hit level 3, we moved to stop 2. When it hit level 2 here, moved the stop to just better than halfway. And then when it hit level 3, moved the stop to break even on it. So we need to mark that on our level 2 hit on the trade sheet. So we moved to halfway. I moved it a little better than that. And then level 3 was hit here, which is our 2 to 1. And then we moved to a break-even point. All right. So once level, if level 4 gets hit, right here, level 4, then if level 4 gets hit, I'm going to move my stop to level 2, which is here. Okay. I don't know why I have level 1 in there, guys. I'll have to take that out. I actually have level 1 here, and then, level 2 and 3. Level 1 is the break-even point. It's just the way the fib tool is that we've modified. So I'll take that one out. So we haven't hit that level yet, level 4, but I've already got it here that if it hits level 4, I want to move my stop to level 2. If it hits level 5, I want to move my stop to level 3. I want to move the next one to level 4. You guys can go in and check these. And to think about it, I could actually tweak the form for us. I'll have to think more on that. But I can tweak the form. Oh, this would actually be nice. I'll get some input from you, but I think what I can do is tweak the form like this. If you're going to hold your stop 2 levels back, it'll auto-populate all these down in there for you. You can always still go change them. But what I think I'm going to do is do that. If you're going to go 2 levels back, it'll go ahead and auto-populate if it hits this level where your stops are going to be for you. That would be pretty cool. So far, not much action. You know, the wick of this candle just pushed up to test this low area in here. All right, so a couple red candles, good for us. We'll see. Yeah, where's that at? I like that we're seeing the long wicks there to the, the long wicks, the tails to the top side. It typically means you might get a reversal. If you look at all the high and low swings, you're going to see wicks, tails, whatever you want to call them on your candles. So if you just go back and look at the swings, again, you're going to see long tails. You're going to see wicks. What that means is we might be getting ready to turn. So the bearish side of the market's still pushing down. The bullish side of the market pulling it back up. Same thing over here. We get up this big bullish candle. We start seeing long wicks to the upside. So the bears are still trying to, or the bulls are still trying to push it up, but the bears are pushing it back down. What did we get? We got to push to the downside. Wicks in here. Wicks up and down. Broke out above these highs, went to the high side. So it doesn't always play out, but most of the time, if you look at the swings, you're going to see wicks. So a long bearish push down here, but you're going to see wicks on every candle here and there. So you can't try and, you can't use that alone and say, well, it's turning, okay? Because you look over here at this little swing up, you see this big green or this big wick candle here, green. Of course it pulled down after that, but did it give you any length or strength to be able to get in that trade and close partial? No, it didn't. Okay, so you can't just use the wicks alone. You have to look at other highs and lows. You have to look at the moves and draw your retracement lines and trade lines. Wicks alone will not do it. Nothing today for foreign currency later. Looking tomorrow. We got we got GDP for the British pound at 2 a.m. tomorrow. Night before the last, I was up till 3:30. Trading news in the currency pairs. So yeah, I expect some moves tomorrow in the market. We should have some decent swings and moves. All right, so there's a push, further push. I can't really do anything. I can't close partial. I've only got one contract on. So now we're just now back to this low. Okay, that previous area where it pushed down. So we saw the bearish side of the market, nice bearish push down. The bulls pushed it back up. Bears won out, pushed it further. We're back to that point. Are we going to see the same thing happen? Or are we going to see the bearish side of the market push through this a little bit, only to push back up, and then go? So we have to kind of wait it out and see. I'm already in it, so we're just kind of waiting to see what happens here at this low. I need it to push to level 4. If it pushes to level 4, that's our 3 to 1, and then I'll move my stop down. Now I can get kind of aggressive now. It's back down there. And if I get aggressive now and move my stop like this, I just have to know that if it comes back to test this high, it's probably going to wick up there and take me out. Okay? So if it does, I have to be willing to say, okay, that if that happens, if it pulls back up here and wicks up to take me out and then moves without me and just keeps going down the rest of the day, my bad, right? Because I moved my stop aggressively. So it's up to you how you move your stop. To me, the runner is just that. It's a runner to capitalize on a bonus. I would love to see big runners. I love to see big runners. In order to see the big runners, though, you have to leave your stop out there. That's kind of hard to do, guys, in prop trading. So for those that are trading prop firms, because you're seeing your profit in here go up, that means your drawdown's moving along with it. So you have to be careful with your how far you leave your stops out, especially through the night if you have trades on, because your trailing threshold is going to move. All right, let's see if it pushes through here or not. I just love how that last candle stopped right on that line. Doesn't always happen. But there's a reason why they do, guys. It's price. This is price action. There's price points. Price in the market between the bullish side of the market and the bearish side of the market. They're trading price. There we go. So we pushed down. So it broke level 4. So now I'm going to move my stop level down to the 1-to-1 level. So we've locked in a little more profit. Not quite halfway. We're up about 105 on the runner. And we're not halfway down. So we're about a third. So I probably locked in about $30 on the runner. So we were up, what, 277. So with the 30, we'll be up about 300 on this trade. So that's a good trade overall. Again, just looking for 500 on the trade on this account. So there's our push. I'll take this off. And the reason why, we feel it's safe to move the trade is because we know it's going to pull back. We don't know how far it's going to pull back, but now we have several areas as kind of a line of defense between where our stop is and where the current price is, okay? We have this low in here. If you look at the candle lows, where the candle closed, right here, it pushed back up, candle closed right there, okay? So that's a good price point. It bounced twice there. So that held up as support here, okay? So candle closes above twice. So that's a good price level. It held up as support here. We would hope that it holds up as resistance over here, okay? And I didn't want to use that tool. But we would hope it would hold up as resistance as it pulls back, okay? So we have that price point. And then we got right here. We got where candle pulled down, this green candle pushed up and closed right there. Even though this candle wicked up after opening, it never closed above this high. We also have this level here where it swung up, candles closed, okay, under that level. So we want to mark that too. So those are our two lines of defense. And then we have this wick. To me, that's kind of a poor one. Okay? I mean, it came down, and it could hold up. Don't get me wrong. But we wicked down all the way to wick back up during that 3-minute time frame, okay, between the bullish side of the market and the bearish side of the market. So to me, that's kind of a weak level. Here, we see more of the price swings, okay? So even though this candle stopped right there, yes, it may hold up. So we have several areas as a line of defense in here between where price is and our stop. Got a couple guys in there that'll try and hold it down for us. That's what we want to see. If I move my stop down here, well, that's pretty aggressive. I would expect to get stopped down. So on the stop management, it just depends how aggressive you're going to be with your stop. Some people are one level back. And if I put it one level back like that, I just know that if it bounces here, pulls back, I'm probably going to be wicked out, and maybe it'll move further. But that also means that, pulls back, wicks, candle stops here, then it wicks me out, just a big wick, and then moves down, okay? Because of where I have my stop. It's a little aggressive, okay? And you might get wicked out because of that. But that means I took profit here. I'm locking in more profit, right? If I choose to keep my stop back here, two options, two things could happen. I mean, it could come back, not stop me out and move on. That would be great. I'd be up for that. The other is I actually get stopped out. Could swing at these levels and then come stop me out. So, not so great. So the first, if it comes, if I had my stop and I move it down to level 3, I get more profit on my runner if it comes all the way back. So if it does come all the way back here and stop me out, I'm making less profit. That's something you have to choose for yourself. Do you want to keep your stop out of the way? And I like to keep my stop out of the way for the potential of gaining a lot more profit when these things run and run the rest of the day. Okay? So it's really up to you. It's a personal preference based on your risk tolerance. All right, so we pulled down. Trying to get this over here. Nice push. Passed. It finally stayed down. This wick popped up just to test that level, and it did stay down. So what I thought was like the weakest, swing, it basically just a wick down. We had a good push off that. Did not quite get to 5 almost. So at that point, I have to decide if I want to move my stop down. I'm thinking I'd almost like to see it test this level again. And that's what I think I'm going to wait on. Because I can't close it. I mean, it's either I close it all. When it was down here, I could have just closed it all and been done. It's either that or we're stuck managing the stop. So what I would rather do, because again, we had another nice big bearish wick. I think I want to see if it'll come back up. I think I want to wait for another test to that level, if we get it. Is it going to do something like that? Or is it only going to go here on? It may stay down. We'll see. But I don't want to move my level yet. I want to see some more solid candles down there. The bear side of the market's definitely in control right now. It's been in control all day. I mean, you look at that. This is what? 3 o'clock in the morning. So London session. Other than this pullback, you know, we've had some decent pullbacks. We've had 2 good pullbacks right here. And you'll get the minor retracements in here, these little up pushes. This one right here was a decent push, and that was at 506. So this is the London session. We had a pullback off that. And then a little sideways movement this morning until 7:30. And then we had another push. So we knew it was, you know, we're going short. We're going with the odds. It's all about stacking all the odds in our favor. That's why we got the checklist. That's why we got this checklist right here. We're stacking. Everything's red. So we're only going to look to sell. That's all we're doing. And we're going to stack the odds in our favor. We're only going to trade short. So far this has been a great trade. It almost hit level 5, which is 4-to-1 risk reward. To me, this is kind of boring, trading one instrument, but that's fine. Trading, if you can trade and it's boring to you and it's not nerve-wracking and your stomach's not upset, then you're trading right. If it's super, super exciting, you're anxious, you're taking Tums, Tylenol, you're probably getting in trades you should not get into. And probably trading on a time frame you shouldn't, and probably trading with too many contracts. Been through all that. Like that we've seen nothing but bearish candles so far. Those long wicks, though, just means that the bullish side of the market's pushing back. So we're getting pushed back. That's why I'm kind of prepared for the pullback. Don't know if we'll get it. But every time you look and see, you know, we see multiple red candles here. Then we get a big pushback on it. So multiple red candles in a row, long wicks, pushback. Okay, we're only going to trade short. 3 candles here, red, wicks, pushback. You know, long wick, pushback. So that's what we're looking for. As it pushes down, as it pushed down in here, that's why I said when that wick moved down and it pushed down, I was not ready to move my stop because I'm expecting that pullback because we had it right here. During this 3-minute candle, we had a pullback, okay? If you dial it down to, and you don't have to dial it down to a 1 minute to see it, it's right there. The candle opened here, pushed all the way down, and it pulled back. Okay, that's the bullish side of the market pushing back. Long wick. I'm expecting a pullback. We don't know how deep it's going to go, so it's not time to move my stop. So when it wicked through there, that was not the time to move the stop. Just like it's wicked down here. So it wicked down. Long wick is not the time for me to move my stop down here to level 3. It's just not yet. I need it to swing back up and make a lower high. Okay? Just like we did over here. We had a long red wick. And then it pulled back. And then it pushed past that low. Once it pushed past that low, instantly, as soon as this candle opened and pushed past that low, that instantly it's made a lower low. You don't have to wait for the candle to close. Technically, as soon as it breaks that line, it is lower than this low. So it's made a lower low. Look at the high. It's back here. So that's our lower high. and then we moved our stop down. Okay, so now what we're waiting on is the same kind of thing. I'm going to wait and see if it pushes past this low. If we do not get a pullback and it pushes past that low and closes past that low, I will move my stop to level 3. So we're waiting on that or the pullback, one of the two. Where will it pull back to test? If it pulls back, I don't know how deep it'll go. I don't know if it'll turn right here, at this previous low right here and then go, or will it pull a little deeper and turn at these bodies right here and then go down? Okay, so we have to wait to move our stop. Unfortunately, it's a waiting game. Giving up a lot of profit here if it pulls back. Because again, we were up, what was it up? I don't know, 100 in here. And we were only about a third of the way down, locking in 30. So, I think I said we're going to lock in about 30 on this. Overall, look at the whole move. We're just in on this. Just keeps pushing a little bit further and further. And you'll see them lose momentum. They lose steam. Let's look back here at the, since we got a chance while we're waiting. So look back here at the London session. We had, bears in control, just push, little stop and go actions, what I call it, where it just stops a couple candles, push, stop a couple candles, push, and then we got some pullback. And then it went down for some more pullback. There's a fight going on there between the bullish side of the market and the bearish side of the market. Okay, we did finally follow through and get way down here, but look at the pullbacks every time. Pullback, push down, pullback, push back, pullback, push down, pullback, push down. So it's lost steam. In here, the bears had control. There's no denying the bears had control during this move. In here, they still had control. They were still winning out overall. However, the bullish side of the market's pushing back, right? So that's a little more indecision. We have to wait. We're waiting to see what happens on that. So if you don't catch this move, you might get caught up in some of this that you can get profit on, but you might end up getting in a losing trade. Thus here, pull back. So we had this big healthy pullback, sideways movement while we're making that decision. Are we going to continue short or not? Our indicator said sell, because the 4 hours still red. And then the 15-minute and the 1 minute, or the 15-minute 1 hour, both turned red again and again and again to line themselves back up with the 4 hour. So we were looking to just stay short. Okay, again, we're stacking the odds in our favor, looking at the higher time frame. There's that pullback. So again, we had that long wick on this, which again, open of the candle, pushed up a little, pushed down a lot, come back up. There's a battle going on there between the bullish side of the market and the bearish side of the market. Next few candles pushed down. We hit that price level, or it just hit that price level a little bit, and we're pushing back on it. So we just have to wait. Love to see this level hold as it tested it here, but we might pull past that on up to here. So we got to kind of see here. Again, are we bouncing? Or, and we could, guys, we could bounce off this and then go back up here to test that still. Is that what we're going to see? So you have to kind of run the scenarios and go, well, what could I see happening? Can I move my stop yet? We have our line of defense, several. So again, we have this low area in here, low back here, So we have several areas in there that if it pulls back, we would look for it to bounce off those areas. Do we know that it's going to bounce off those areas? No, we don't. We have no idea if that's what it's going to do. So all we can do is run these scenarios through your head and look and say, well, if it does this, I'm going to do this. So for me, I'm sitting on my hands right now. I don't care if it pulls back and stops me out. Does that mean I'm giving up a lot of profit? Yeah, that means I'm giving up, what, right now we're up about 100. We're locking in 30. So I'd give up 70. Do I care about the $70? No, I don't. Because I'm going after the larger target on this, okay? I'm going after this, well, if it trends all day, I want more profit, okay? I want a bigger runner. That means that, yes, I will get stopped out more than the other guy with smaller runners because I'm going for those runners that last, for the whole entire day, or they might last a couple days, okay? And that's what I want, is to see if we can have a day trade that turns into a swing trade. So right now, this is a day trade. And we'll see if it turns into a swing trade where it might be on for a couple of days. Those are the best. And then you'll have some of them that'll run for weeks. You guys have seen them where we've gotten into trades on a day trade like this. And then they've been on for a couple of weeks. Platinum was the most recent. And that was like, 2 months back. But plan the scenarios. Run them through your head. That's why if you're trading on one instrument, focused on one instrument, it is easier to do this. It is very easy to sit here and analyze what may happen. Where's my price levels, my line of defense, okay, as it pulls back, and what's my plan moving forward? It is easy to run through this if you're trading one instrument. You're trading two, still pretty easy. And we're on a 3-minute time frame. So we have 3 minutes for each candle to form. So that's nice. If we were doing this on a 15-minute time frame, it's very, very slow. You got 15 minutes between candles to kind of do what you want. I do recommend setting alarms. I used to get up when I traded the 15-minute time frame from my desk, get on the phone, somebody call me. I'm a pacer when I'm on the phone. I do not sit down and talk on the phone. For some reason, I just stand up and walk around. So, that being said, I'd get up, go walking around the house, end up in the family room, talking on the phone, and an hour later, I'd be like, oh, I got trades on. So I recommend setting like a 15-minute timer, taking it with you when you leave your desk. So every 15 minutes you can come back and check the candle, if that's what you're on. If you're on a 3-minute, you got 3 minutes to get up and get back before the next candle closes. So I like that we have this big bearish candle so far. I'd love to see the body of this candle close. I'd love to see this body of this candle close down here, especially. Because right now, the bears are in control. We've got a strong 2-candle pushback on the bullish side, 1 candle down. Okay? So we're still seeing strong bearish move. Volume's only at 400. If you go back and look at volume of the candles, we were at 480 there, 493 on that one. This red candle was only at 330. So, we're getting decent move on it. But I'd love to see this candle close below. We got about 10 seconds because it might just pull back before closing. You got about 3 seconds on this candle, and then we'll start printing another. Yeah, see, there's a little pullback right at the end of that candle forming. So we should see the bears push back down toward that line to finish off this bearish push. It might not even get there. I'm looking at these tails right here. I'm just looking at these tails going, is it really not going to get below those tails? Sometimes you just get disgusted with it. It's like, really? You're not going to get down there. There we go. It's just peaking. So I'm trying to decide if I want to move my stop down one level or half a level. So we've had that pullback, right? So right now we're still waiting on it to break this low. If it breaks this low, technically it's forming a lower low. So it came down, bounced here, pulled back up. We've made a lower high, okay? Lower high here than that one. Technically, this is a lower high. So we have a high, lower high, lower high, lower high, lower high. So now we got that push to level 5. So I said if it hit 5, I was going to move here down one level. So now we're up, 130, and I'm about halfway, just judging by size there. So we've got about 65. We'll just call it 60. And we're at 277 plus 60, so we're at about 330. Right now is what we got locked in with where our stop is, so about 330. So far it's played out well. I'd love to see this candle go down. We still got 51 seconds on the candle, so thankful it pushed and touched that line 5. I was getting ready to move my stop anyways, even though it hadn't hit line 5 yet. It was based off of this right here. It made a lower high. Okay, came down, made a low, came back up, and then on this push down, it made this high here. So making that lower high and that lower high turning at this wick right here, okay, that's when I was like, okay, where can I move my stop? Because it's made a lower high. And I was thinking of either moving it there to level 3 or moving it halfway. Remember, I was up here at 2. So I was thinking either moving it just halfway down to level 3. But since it made that lower high, it was going to be right at level 3. It made the decision for me. It pushed to level 5. My rule is we're going to move it down to the next level. So I need to check this off. We've hit level 4 and level 5. And my stop is at level 2, or level 3, sorry. So we hit level 5 and then move the stop to level 3. So we're trailing 2 levels back, like we put in here, that we were trailing 2 levels back. So far it's worked out well. This is where that runner is going to stack on. And I don't know what I'm going to get on the runner overall. Right now I'm very happy with this trade. Very happy. It's hit profit target. Hit profit target 1, profit target 2 for the runner we had. Did I put the runner in the trade sheet? I think I did. Yeah, the runner's right there, 69. I don't put in the added one here until it closes. So until this one contract closes, once it closes, I'll go add that to this 69, and then that will give me my bonus runner's profit. So right now we have about, what did I say, 60, about 60. So you add that to the 29, it's 129. So we've got 129 locked in on the runners. And then hopefully we'll get more. The goal is just to let it run as long as it'll go. Get what it gives you. Let the market pull you out. Let the market give you the profit it wants to give you. Typically and again, we've already been out on the 4-hour time frame, the 1-hour time frame, and looked for zones and marked zones down there in our way. All right, so let's look at what, and so what happened, obviously it pulled back up, and it did this. It just bounced right there at that level. So that was one scenario that I was looking at. that could happen. It could have just pulled back up, bounced at that little low here from this wick, and then go down. And that's what it did. So it didn't do this. But we always want to plan for both. We want to look at both and decide where's the best place for us to put our stop. So right now it's pushing, right? So it's made a low. It definitely broke these levels. I'm going to take that one off. That one was to mark these two tails, because as this candle opened, I didn't know if it was going to break it. So right now we're moving to level 6. If it hits level 6, we're going to move our stop. So if it hits level 6, which is here. Oh, guys, I keep popping on my trade sheet. You guys can't see it. I'm sorry. So if it hits level 6 here, then we're going to, move our stop to level 5 or level 6. Move our stop to level 4. So we're going to keep that 2 levels back. So right now it's made a lower low. As soon as it breaks the previous low, it's made a lower low. Doesn't have to form a candle, doesn't have to close. It could go down, and it could come down past that low and then pull back up and give you a wick. Technically, just breaching this low, it's formed a lower low. So now we have this low right here that was our low to break that we broke, okay? And then we have a low here. This was our low over here that as it pushed down, that was our low to break. We're wanting it to break these lows. We're in it short. Why wouldn't we want it to break the lows? I want it to break every low it can because we're in it short, okay? So we want it to break the lows. Right now it's at level 5. Our stop's at level 3. If I wanted to squeak out a little extra profit, I can move it like right here. I want to keep it above this high. I don't want to do this, as I don't want to move it right there. Because to me, I've got no line of defense. I've got one. If I move it right there, I have this right here, this low area in here, as a line of defense, okay? I want to give it the extra room. So it's either leave it where it is, level 3, or move it down a little bit, about halfway to this high right here. Because now that's what we have to do. We just have to keep moving our stop. So what can happen now? It could keep pushing, get our level. It could pull back to test this low right here. We've got a wick here. We've got the candle closed there. So that's why sometimes it'll pull back up. It might not just test this wick. It may come up to test this candle, this body candle of this swing down. Okay? So that's when you'll see it pull through only to go short again. It just pulls a little bit deeper. That's why we have to leave our stop out of the way. Can it go all the way back up here? To test, you got a wick here, wick here, wick here. Could it go back to test that? Now, it's not going to move straight like that. Straight up, no, I've seen it go straight where it's just gone straight up. But typically you're going to see it, swing. And this would be a slow process if it does that. Would it wick all or go all the way back up there? So those are the 3 things that may happen. What are you going to do during each of those scenarios? Well, during this pullback and this pullback, I'm not doing anything while it pulls back. I'm sitting on my hands. I have my stop there. I'm not doing a thing as it pulls back. I'm just killing time. And since I'm trading one instrument, I would try and find something else to do while I'm waiting. Set an alarm down here if you want. Add alert. I have to turn my computer sound on for that. Add an alert. I don't even know what, yeah, we got the trumpet. So add an alert on that alarm, or that line. I moved the wrong tool. I want to move the, yeah, we'll just leave it alone. I'm trying to grab the alarm line. It's not working. There it is. So set an alert. Especially if you're falling asleep at your desk. So not really doing anything yet. So waiting on it to push down here, right? Scenario 1, waiting on it to push down here to level 6. If it hits level 6, I move my stop to level 4. If it doesn't do that, if it chooses to pull back, I'm sitting on my hands during a pull back. Once it turns and makes a lower high than this one, whether it be here or over in here maybe, but if it makes a lower high than this one and starts pushing down, well then I can move my stop a little more aggressively off that lower high. Right now I'm not looking at this as being a lower high. All right, guys, sorry about that. Had to let the dog out. All right, so we're getting that push back to test that tail there, that wick. If it pushes past the low, and it may, it is. So since it's pushed past and hit that, there's our alarm. Hit that level, we're going to go ahead and move our stop down. Yep, I don't want to draw a line there. So we're going to move our stop down to level 4. We're also going to come on the checklist, and it hit level 6, so we moved to level 4. It looks like it wants to push to 7, but we're not there yet, so we'll have to wait. So we can take these off. So far, neither one of those panned out. It did. We had scenario 1 where it popped down. So great trade still. We got 185, 188. We're over 100. I can tell we're past 50%. So we got 187 in the hole with price down here. And I can see where our stop is. We're a little over halfway. So we've locked in about 100. And it's still pushing. So we were at 277 locked in on these two right here. And now we've got around 100 locked in, so we're at 377. Again, only looking for 500 on this account. So we're almost there on just this one trade. Now, it might not have trended today. So far it's trended well. So it may not have trended, and then we just wouldn't have got it for the day. And that's why I like trading multiple instruments. Because sometimes one or two things will trend and the rest won't. You'll get chop. Nice choppy market. So we're at 188. I could close out for the day. I like to let my runners go. I don't like closing. But technically, we're at 277 here, locked in. We got 188. So I could close out and I'm over the 500 for the day. Now, I'd like to try and grab some extra profit if it's going to give it to me. Right now it's trending nicely. I could also end up giving back what I've got right here. Open potential profit. You have to decide, again, what is your risk tolerance? Because again, I'm at 277 locked in. I could close out the whole thing, the whole 183 extra, and I'm over 500 for the day. Right? Yeah, close to 500. I guess we would. We'd be at like 460 or something. So close. So you have to decide. Are you going to close it all out and be done on this push? Do you want to see more? I don't know if we're going to get more. And it looks like the indicator fell off. That's all right. We know everything's red right now. It falls off about at the 4-hour mark on the 10. I don't think it does on everybody's account. I know it does on mine. So again, we're still at the 1560 and 4-hour. It's trying to repopulate there. So there's the healthy pullback we're getting. So again, how aggressive are you going to be with your stop? Right now I'm 1 level back, or 2 levels back from where it hit. Hit level 6, even went beyond a little bit. Kept my stop there. Line of defense would be this low here. You know, this low swing right here. That candle low. And then we have this one here. Let me take that off. Where it came down and kind of paused there for that little stop and go. So we have that as well. And as you can see, I'm getting multiple lines on my chart as it goes down. And this will happen at the end of the day, just clear them all. But technically, mine looked like a war zone, especially if we get healthy retracements. And I'm drawing retracements lines every time it pulls back. Watching 6 different instruments on this one screen and drawing lines like this on all of them, it gets pretty messy. So here's our pullback. So what's going to happen on this pullback? Is it only going to that level? Okay. Is it going deeper? I don't want that tool. I don't know why I keep grabbing the wrong one. Is it going deeper? Okay. Or is it going deeper still? Which I would not want it to get to my stop, but it may. And I keep grabbing that for some reason. And the reason why I drew that one and stopped it here is this over here. Will it turn there? Which one of these is going to... And it could go all the way back and stop me out. Because it could come up. This could be our deep retracement, our deeper one. Where it comes all the way back up here. And test this level over here. The high of these wicks. Okay? Remember this one back here was our low right here. So as it came down here and turned, we marked that as a low to break. It broke it. It tested it. It retested it. Then move on. Okay? Is it going to go that deep? Don't know. If it hits there, it stopped me out. And we're going to get that, whatever it was, around 100. I will start to delete some of these lines off. Just get some of them out of the way. I'm gonna leave these on because these are marking these wick highs, wick lows, you know, where the candle body's turned. I'm gonna leave this one on here right now at that candle body turn, because we're pulling up to that now. So we'll see how this played off. This is a healthy retracement, and it may stop us out at 127. And I was guesstimating around 100, as I was just trying to visualize. We were at 180. So if it pulls back, hits my stop, I gave up $80. But I've seen runners go several hundred. And I'm talking more than just like 200. I've had runners go 300, 400, 500, 600. I've had runners go over $1,000. One runner over $1,000. So that's why I leave my levels 2 levels back. That means that if it comes and stops me out, that means I'm giving up the $80. Because again, I was up 180 here. But who knew that was the last low, that it was the lowest it was going to get? We still don't know if it is. So you don't know that. I wouldn't have known. If it comes back and stops me out, if it comes back and stops me out and then goes all the way up here, there's no way I would have known that this was the pivot point and that I should close out at the 180 that it was at. There's no sign. There's no signal. There's nothing telling me there that that was the place to close out the whole entire trade. Okay? You just have to leave your stop where you leave your stop, where you decide you're going to put it. So again, if it hits my stop, which it looks like it's going to pull up and hit it, I'm fine with that. I still get 100 on my runner. And the reason why, and yes, I've lost, it was like at 185. So I'd be losing 85 off trying to close here. Okay. But that's to capture and leave it on for the runners that do keep going the rest of the day. And we get that $300, $400, $500, $600 or $1,000 on one runner. Okay. So yeah, they don't always work out. There, we got our stop filled. All right, I'm gonna turn my volume off now. So we got stopped out. I'll have to go pull the report and see where it's at. So is it done pulling back? Is it going to keep going short? Guys, it may turn here and go short again. I don't know. This is just a healthy retracement. But again, there's nothing that told me that, hey, you might want to close here at the 185. And I said that when it got down there. Remember, I said we could close out and just be done with the whole thing, been done for the day. And I would have been around 450, I think. It would have been shy of the 500. Let me pull the report here and see what we got. Let's see on the runner. Let's see the last runner. All right, so we got 105. So I knew it was around 1. All right, here. And I'm going to hate it if it turns and goes without me. Sure, you know, part of me is going to go, see how my stuff, but I wanted to move my stop 2 levels back. Let me put it on. I think I got to go on this screen. So now we put the 105 in here plus the 69, which would be 174 in there. Those are all my runners. So again, the 208 was the initial close. We had 6 contracts on. That was closing 4, 208. And then we closed 1 at $69 and 1 at the 105. So total on the day with the 208, 174, 382. Is that right? Yeah. So 382 on the day. So happy with that on one instrument. Again, that's only trading one. And again, I'm only looking for 500 on this account. So now I can look for either another entry or after a pullback. And I would want to see the, let's go back to the screen here. I'd want to see, draw a trend line, which I kind of got one almost there, but not really with these. All right, I'd want to draw a retracement line up and then look for that retracement line to be broken, tested, and I want to see down here, I want to see the bottom, the top of the bottom indicator, which is our 15-minute candles, 15-minute time frame. I want to see that go back red. While this 15-minute time frame, which is the top bar, is green, that's not the time for me to short, because since it's turned green here on the 15-minute time frame, it means it's pulling back, which we see that it's pulling back. This move up, these three candles up, this push up, this push past this high, okay, we're seeing structure build up to the bullish side, okay? So how far is that going to pull back, or is it going to be a reversal? We don't know. You just got to wait for the structure to build up. So ultimately, I'd be looking for, again, if it breaks this retracement line and then comes back up to test that retracement line. That's what I'm saying. My stop was probably just too tight. But that was 2 levels back. That's where I wanted it, 2 levels back. But is it going to break that right here now, hit this level right here, okay, and then come back up here to test, you know, this high in here? Is it going to do that? Test the backside or even the backside of that line, and then move down. So there might be a chance for me to, you know, get back in again. You know, I'd look for that break, pull back to test it, and then red candle. And I want to see this down here. I want to see a sell signal on it. All right. So I hope you guys enjoyed. I want to just do a little something different today. Trading this one live and just taking one trade, one instrument. It is a little boring, but that's okay. You got to trade what you see. You got to trade what's going on. You have to be aware of these highs and lows. You need to be aware of when they're broken so you can adjust your stop. So when in this case, as we're going short and we sold, every time it breaks a low, okay, technically it's made another low. As soon as it pushes, as soon as price pushes past this low, it's made a new low. It's making a new lower low. That's the chance to move your stop down above a high swing. If you're one level back, you would have moved it here. Pushes down, okay, pulls back here, and then pushes back down, breaking this low. So this candle pushed down, broke that low. Move your stop down, okay? So always be aware of your lows and highs. Always be aware of what's going on, and always be aware of what the price action is telling you, such as like the big wicked candles, meaning the other side of the market is pushing back, okay? So big candle up and down, wick, long wick up, means the bullish side of the market is trying to pull it up, bearish side of the market pushing back. Same thing here. Bearish side of the market pushing down, bullish side pushing back. So possible reverse, possible change in direction. It just kind of gives you a heads up. Doesn't mean it's always going to do that. You get long wick like in here, okay, and then the next candle just push down. So it doesn't mean it's going to turn. It means that between the bullish side of the market, the bearish side of the market, there's something going on there, right? They're fighting over price, okay? That's all that means. So you need to be aware. You need to see what you need to know what the candles are telling you. Right now we're seeing some, you know, we're seeing a hammer. We're seeing some doji candles. So it's flat right now, just going to move sideways. Is it going to break out the top side? You know, or are we going to get our test in here of this level? I know it's kind of a funky, wonky line. But is it going to pull back up and test that and then move short again? So we may again get another opportunity to short. So I'll be watching for that. So I'm going to kill the video. Hope you guys enjoyed this one, and I will see you later.